As of January 22nd, 2012, Sunday, when the markets open, looks like precious metals and oil and probably most commodities are having a pullback from most commodities well, especially the precious metals had a very good day on Friday, especially the silver. Oil was pulling back, and I think oil might pull back a little bit further. I'm playing it where I'm out of that double leverage, or just about out of it, very little bit. And I'm holding a position in oil, but if it drops down far, it might drop below 95, despite all the talk about tensions with Iran. And this is the game that goes on. That probably might be the area to buy some US UCO double leverage, but I don't think I'm going to touch it unless it goes down closer to 90. And I don't know if it's going to do that. So, but I'm not going to move until I see a hard drop. The demand's not there, and I think this stuff is going to go up extremely high. But as the game always goes on, there's a lot of volatility. A lot of people think silver market's rigged. I think all the markets are rigged, but it's a matter of psychology. You hear a lot of stories out there about the silver market, the conspiracy, and all this type of stuff. Well, I don't think it's going to drop that much anymore, and I think that's pretty much the consensus now. There's something, this has been out for quite some time, about the Fed's latest easing could cost $1 trillion. QE3 is on the way. I keep hearing these stories about this, and this, the last one I heard was 600 billion. Somebody else in this article says 750 billion. This one's saying 1 trillion. But a little common sense tells you, with an election year coming up, what do you think they're going to do? QE. Guaranteed. They got to. They got to. So, I think that will be the game. Now, Ron Paul, I know people don't want to hear that stuff, but I'm not going to say it. But you got to remember, the guy that's really your friend, if you're holding silver and gold, your guy that's really your friend is Rabbi Ben Bernanke. He's the guy that's going to make you rich. And to tell you the truth, the Fed can't jumpstart the economy anyway, even if they wanted to, because really it's the people themselves. And we got a lot of fluff in our economy, and a lot of industries really don't produce nothing, and too much bureaucracy, and that's what slows everything down. It's halfway to fault of the people, and it's halfway to fault of the leadership. But it's not all the fault of the leadership either, even though they're a bunch of scammers in a lot of ways. It has to do with really a lot of the economy is geared to unproductive things that really aren't needed by people. There's a lot of waste out there. This is an article that was posted on January 19, 2012, and I was stating that was just a few days ago. Today is January 22nd, 2012, Sunday. I think this article is great because I'm going to hit the points on it and comment a little bit about them and post a link for this. The Federal Reserve is likely to step in with $1 trillion worth of easing that could be announced as soon as this month, January. In other words, at the end of the month, according to a growing consensus of economists who see the recent uptick in economic growth as unsustainable. The last quarter of 2011 was doing very well. With the Fed's Open Market Committee set up to meet next week, which is right coming up this, last week of January, expectations are rising that the languishing housing market will drive the central bank to buy up mortgage-backed securities. Now, the housing market, just to give you a little background information, the housing market is the American economy. It is, I know some people say it's about 25% of the American economy, but in some ways, if you calculate a lot of industries that are somewhat dependent upon different things from the housing market, it's almost half the American economy. So without this, the American economy will not recover. And I also want to drive home another point. I think precious metals are going to go way the hell up. I do believe that. But don't think that's the only asset class people can't invest in. How much money is looking for a home in real estate? Real estate prices may spring back at one point in time, and all the money has to find a home. It might go back into real estate too. So I think the place to be right now is definitely the precious metals, but don't think it's going to be a forever hold, because I think a lot of the people that are far too much advising precious metals, I don't know what their game is, but watch that bubble when it breaks. It's going to be worse than the real estate bubble. The big money can find other places to go besides precious metals and commodities. They have too much money. They're probably going to go back into real estate. Now, I also want to comment a little further on this too, that when the Federal Reserve is buying up the mortgage-backed securities, you know what the Federal Reserve consists of. It's a cartel of banks. There are shareholders in those banks. So in effect, the words that Lindsey Williams says, even though I don't particularly think he's getting good information anymore, what he says is that the elite are buying up all the properties in the United States. And yes, they are doing that in a way through the Federal Reserve. So there's truth in what he says, but just you can read the truth without even knowing what he says, but it's good to know what he says too, to verify things. But you got to watch. I think he's being thrown bad information now, and quite obviously he gave out some bad information for 2011, and it's not him. That guy who's giving him information now, he can't be trusted. And that's how I am. When I start getting bad information, I don't smell something right, that's done. I'm being very honest on here, so I'm not trying to grab subscribers or anything like that. I'm telling you the truth. The goal of the purchases, which talking about the mortgage-backed securities, will be to drive down interest rates even further from record low levels. Less obviously to spur confidence, with more monetary tools remain to stimulate the economy. So, of course, the announcement could also push stock prices higher as the Fed's last balance sheet expansion began in November 2010. Just a few months ago, market observers speculated that another round of quantitative easing, QE3 in this case, would be politically infeasible and probably unnecessary given hopes for better growth in 2012. But with housing stuck in neutral and a European recession on the horizon, economists believe QE3 is all but certain. So it's coming up, and I think when they have this next meeting next week or whatever it is, the last week of January, just him saying a particular Bernanke, saying a particular one word or another, one way or the other, that's going to drive your precious metals prices. Forget about all this. I mean, I know there's like a conspiracy in a way. Yeah, there is. But just forget about all that kind of talk and think with a clear head. That's what's going to drive these metals up, and it's going to work. But when it gets up high enough, it's going to have a hard pullback, and everybody's going to say it's this conspiracy again. There's some truth to that, but if you could pick the tops, you're going to be doing a hell of a lot better than you are just holding and buying on the lows. Andrew Wilkinson, chief economic strategist at Miller Talbot, released a paper Thursday that makes the case for more easing, quantitative easing, which could be put to push stock prices higher to where the Standard & Poor's 500 index will rise in 11% to 1450. Now compare that with all the talk about, a big crash, better short the market. I think you're foolish to short the market. And I'm going to bring something up right now, because Mark Faber, I go a lot by what that guy says. I think he's got good information. He'll say, keep a good part of money in cash, but he emphasizes, he thinks the equities are going to do better. That's actually a better place to park your money, in equities. But you might need the cash for other things or whatever it is. You shouldn't be without cash on hand. But he thinks that the equities are really going to be doing fairly well. And so people are shorting the market, shorting the S&P because the euro is going to crash and everything's going to crash. I think they're wrong. They're going to be right sometime further down in the future. But they're definitely not going to be right for at least 6 months, at least. Not until maybe after all these elections are over and things are settled in. Maybe something might happen after that. But in the meantime, they're going to keep printing money. That's for Europe and for the United States. So we're going to see precious metals go up. This goes on to say, among a host of supporting data points, perhaps the most interesting is that comparing the amount of equity homeowners have to disposable household income revealed a stunning fact. The ratio has fallen to 54%, which Wilkinson called unprecedented territory. People don't have any extra kind of money, period. They don't have any extra money. It's the lowest it's been in a while, and the savings rate is very low. The upshot is that because home values have fallen so far, real wealth has plunged as well. And the reason home values have fallen so far is because excess inventory is pushing down prices, a phenomenon he thinks the Fed has no choice but to fight. So they're going to buy mortgage-backed securities. Now, obviously, you know what this is going to do to everything. The simple fact represents uncharted territory for the Federal Reserve. Despite a recovery in growth and unemployment, the crippling damage inflicted by the subprime warhorse continues to play a worrisome role behind the scenes. So they're going into territory they never had before. But the Federal Reserve is what is going to make, because they have no intention of going into Zimbabwe type inflation. Well, at least they don't have any intention. I'm pretty damn sure of that. They might screw that up. There might be harder inflation than they expect, but I don't think that's their intention to do that at all. I'm almost 100% certain of that. They're going to devalue the dollar severely, but as far as destroying the dollar completely, no, they're not going to do that. Ben Bernanke is going to help the silver owners and the gold owners, platinum, palladium, a great, great deal. That's why I think the Fed is okay, because I'm in the right position, and you're not going to save the planet. Not everybody gets, well, just beware, because the silver people that are very, very heavy into silver are pushing some seriously high astronomical values. And I think there is going to be some high values, but I think it's not the thing to hold forever. I think that's going to be completely off base. The Fed amplified its own concerns over this issue in a white paper Chairman Ben Bernanke, my hero, recently sent to Congress in a move criticized by some overreaching the central bank's authority by trying to twist the collective arm of Congress. And actually, Ben Bernanke is actually trying to alleviate the pain of the economy. They're going to criticize the hell out of him, but I'm telling you, actually, I don't think the guy's such a bad guy. I really don't. The economy is screwed up, and it's actually not just due to the Federal Reserve. It's due to a lot of things. There seems to be little point in waiting to implement further easing, so they're going to do this right away. And this talk right now is probably pushing up precious metals. Just this talk. Just these things coming out in the news. And to do so could confuse the message the Fed is trying to deliver at a point in time when it's trying to make its communication with the public clearer. Now, the $1 trillion price tag, Citigroup economists a few weeks ago also envisioned QE at that level. It's significant that it will send the Fed's balance sheet to about $3.9 trillion and likely spark war with Congress over threats of inflation. Now, you know there's going to be inflation. You know, that's why I really get aggravated if some people make predictions that silver is going to go up to at least $1,000 an ounce with no inflation around. You know, when it went up to almost $50 an ounce in 1979-80, the high, well, that was only for one day, and the inflation was very high. There was a lot of inflation. So there is going to be a lot of inflation too. So it's not going to be all the price of goods is going to stay down. Now, certain asset classes like big ticket items, you might see real estate and big ticket items like automotive or maybe furniture start pulling back even more, because people are going to be concentrating, spending most of their money on necessities, which is food and energy. So that's where you might see some deflation in certain asset classes. But overall, there is going to be quite a bit of inflation with the silver prices going up a lot. Obama officials have come to realize that the ongoing dysfunction in the mortgage market is a key implement to sustained expansion. And obviously that's very correct, because the biggest portion of the American economy is related to the real estate market. and construction. Their problem is that there's no chance of coming to terms with the Congress to fix the mess. The result is that the administration is moving forward towards mortgage modification, but not decisively. Purchasing mortgage-backed securities is a way that the Fed can support that movement and signal the seriousness of the enterprise. So, we're probably going to see Obama reelected. I almost guarantee you that, to tell you the truth. And I don't know what the hell. I don't think he actually runs anything anyway. That's just some guy you hear up there making speeches. And I think that's just the case no matter who you put for president. The stock market rebound, they're calling it likely temporary, according to the Bank of America Merrill Lynch economist Neil Dutta, who pointed out that the bond market and the firm's proprietary measure of liquidity both point to slowing conditions. So it's going to rise probably for maybe the period before the elections, and then there could be some serious problems afterwards. Like later on in 2012, there could be some serious repercussions in the euro, inflation, slowdowns in the economy, the whole deal. Just like 1979 when they had stagflation. Everything was slow, inflation was high, the economy was slow. And I think those are going to be the same kind of conditions coming up in 2012, but later on in the year and going into 2013. Most markets are signaling that the recent acceleration in U.S. growth will not persist. It is hard to find an area in the financial markets that corroborates the stock market's signal on growth. So the stocks are probably getting ahead of things, but they're going to keep printing the money. So I think you're not going to see the stocks crash right away. But even as Mark Faber says, at one point in time, there's going to be a very, very serious crash. And yes, if you can guess that, you should short the market. But I don't think it's coming up for quite some time. It's not going to come up in the next 6 months or something like that. It's got a little ways to go. And with this QE coming up, expect gold and Australian dollar to rise on the news in the coming months. So I think we're going to see some super moves in precious metals, and all those people, and I'm being realistic, I'm not trying to be a cheerleader here, all those people that are telling you silver's going to stay flat and not do nothing this year, they're wrong. I flat out 100% know they're wrong. I don't know where silver's going to. It might even hit close to $100 this year for all I know. It might. I mean, they've been talking this $100 in 2010, 2011, so maybe it'll hit 2012, but it'll probably be more towards the end of the year. But it might not hit that. It probably, but if you hit some price like that, watch a 50% retracement. Watch. If it's up that high, you'd probably be smart to sell some physical, even that high, because if it gets up that high that fast, I think it's going to crash. So you'd be smart to sell some physical. I would. I'd be selling at that kind of price. But if it crashes down 50%, I'll go buy it back. And despite the advice you hear from people saying you won't be able to get any, wrong. You'll find it. There's going to be stuff around. You won't be able to find all the coins. A lot of stuff will be out of stock, but it'll still be around. Which I compare the physical market in silver as kind of like a speculative trade. Just like anything. You're playing a card game. And, well, I only got a few people on here listening to this, but most people are going to get it wrong. That's why anybody tells me, and I swear I don't like this stuff because I already don't like it at all. Anybody tells you silver is going to $1,000 an ounce with little or no inflation, I don't trust that person at all. At all. That's me. I think I'm 110% right on that. It may go to 1,000 or more with a lot of inflation. So that would be the reason to hold it. But fundamentally, I don't care what kind of statistics you pull out there. I could pull out a lot of statistics on a lot of garbage. It's a scam. I don't like that. To me, they're pushing a pump and dump. That's what I see some of the silver advocates as. So be careful. It's probably could go that high, but there's going to be a hell of a lot of inflation too. So in that case, you would want to hold it. But if you like I said, if this stuff goes to $100 an ounce this year, yeah, I think there's going to be, or close to that, there's probably going to be a hard pullback back to 50 or something like that. So you might be smart to sell some off, not most of it, but some of it, because I think 100 is way too low where it's going to ultimately. Way, way too low. And I'm not just playing that as being nice to the silver crowd. I think that's flat out honest. It's got to go to at least a few hundred or more.